Yo guys, this is the only entry model you are going to need. It is so simple, so consistent, and has helped me pass over 6 figures in funding. So without further ado, let's get into the video. As you can see here, this is the trade played out. Simply, we only have a few confluences. So let me get rid of all of this. We'll go into replay and I'll show you exactly how it plays out and why it plays out. Cool. So simply, all we do is we go onto our pair that we trade. For me, GBP JPY and GBP USD have the cleanest movements in my personal experience. I find this is what I trade because it respects the confluences that I use, and I have just got the most consistent returns and results trading these two. Therefore, I only bother trading these. No need to change something if it's working completely fine. So anyway, essentially what we are trading is the continuation of the Asian session. So simply what we want to do is let Asia play out, and we mark out the Asia high and we mark out the Asia low. So now simply all we're going to do is wait for a break of either of these. We're going to either wait for price to push up to the Asia high or price to come down to the Asian low. So let's see what happens here. Is it going to come to the low or is it going to come to the high? We're about 50% in the range right now, so it could go either way. So let's have a little look. Okay, price. Ooh. Okay, so a big bullish push to the upside. This is a clear break of structure to the upside. What is a break of structure? It confirms that price is going on in its original direction. As you can see, we have started from this low, we've come up, we've come down, we've pushed higher, we've retraced, and we have continued pushing higher, as you can see here, breaking structure to the upside. So now it is confirmed that price wants to continue higher. Now what do? Simply we mark out our point of interest. So price can never travel up in one direct line forever. It will have to have some form of retracement. Now often when price has these big pushes like this, it leaves imbalances in the market. An imbalance is essentially where so many buyers or sellers, in this case buyers, have entered the market that people that were waiting to buy here have then missed the opportunity as price has moved so quickly, leaving an imbalance. This then means that price will eventually have to return to this zone to rebalance the inefficiency before it then continues higher. So now I have my point of interest marked out. Simply I'm going to wait for price to retrace and tap back into it. So let's see if this happens. It's now coming close to it. Okay, we're now in our point of interest. So now simply I'm going to scale into the lower time frame, which would be the 1 minute, and I'm going to look for an inverse fair value gap. Now the reason we look for this is because fair value gaps, imbalances, they look to be respected. As you can see here, this one here, we're looking for price to respect it, bounce off and continue higher. However, when an imbalance gets disrespected, it shows that clearly price doesn't want to react off of the level and instead wants to go in the opposite direction. So now if we can find a fair value gap that is bearish here, which there is one lying just here, if price then disrespects this and respects our higher time frame bullish imbalance, it is evident that price obviously has enough momentum to continue higher and that it didn't want to fill this inefficiency and come lower. Instead, it wanted to respect this one and push higher, as we have inversed this as well. So let's see if that plays out. Okay, price has now left our imbalance here. We have had a candle closure above. Let's check the 5 minute and see if we've had a candle close on the 5 minute as well. Yes, we have. So this is a good example of a well respected imbalance. Prices came down, filled it more than 50%, however not all the way as well, which looks clean. So now we go back to our lower time frame and let's see if it gets inversed. Okay, so cool. We have now had our candle closure outside of the fair value gap, and we have had that just here. So this would be our entry point. Now, another added bonus to this trade is that, as you can see, price came down, came higher, came down, leaving a swing high. Once price has its candle close above that, we have what is called a change of character. As you can see, this minor bearish pullback. We had a bearish leg, however price then pushed higher than the last swing high, meaning that it has changed character from bearish to bullish. So now we have had a break of structure from the Asia session pushing higher. Price has then had its retracement into our point of interest. Then we have had a change of character and an inverse fair value gap as well. So we broke structure, proving that price wants to come higher. We've had our retracement, meaning that price doesn't want to come any lower than that. It's happy at the level that it's gone to. We've had our change of character, confirming it is no longer bearish but instead bullish. And we have had our inverse fair value gap, showing that there is more than enough momentum in the market to continue higher. So as I said, the candle closure outside of the zone would be our entry point. So I would be entering longs from there. And the stop loss can be either below this inverse fair value gap if you wanted to have slightly higher risk, or it could be placed at the swing low, because if price wanted to come any lower than that, we would be having a change of character. Or if you wanted to play it extra safe, you could have it below the higher time frame imbalance, as price may come down, retest the zone, potentially take out this low as a liquidity sweep, but still stay within the imbalance before shooting off higher. So let's play it extra safe and have it here with our take profit at a fixed 1 to 2. Now, the reason why I don't go for high risk to reward ratio trades is simply because of my win rate being so high as well. There's no need for me to be having a high risk to reward when my win rate is so high. Now, often you hear a lot of these gurus talking about you need high R for losing streaks and things like that and such forth. If you take 7 losses in a row and you have a high risk to reward ratio, you can then make it all back in one trade. However, I think this is a bit more of a gambling mindset, because you start entering trades because you know that you can make all of your losses back in one, instead of actually having a proven system that gets you wins and gets built bit by bit. So here with my 1 to 2 risk to reward ratio, I often have a win rate of about 50 to 70%, which is really quite high within the markets. Now I can show you the statistics of the funders that I have passed, proving my high win rate as well, which I will pop on the screen now. As you can see, for this challenge that I passed here with the 50k, I had 100% win rate for both phase 1 and phase 2. But anyways, let's get back into the trade. So stop loss, playing extra safe below the imbalance, take profit fixed 1 to 2. Let's see how the trade plays out. As you can see, it retested this inverse fair value gap, as this is a key level. Let's see if it comes any lower. No. So the inverse fair value gap was the last point it wanted to touch before going higher. Again, we then have a break of structure here, confirming that price wants to continue higher. Now let's see if it continues. And take profit has been hit. Let's see if price continues even higher than this, or if we were just about correct. Cool. So this shows that we were completely correct with the analysis that we done. Price did in fact want to continue even higher. Now this same trade, if we had our take profit at the same place with a tighter stop loss, could have been a 1 to 2.5 if we were at this low, or could have even been a 1 to 9 if we had it below the inverse fair value gap. However, more often than not, with these volatile currencies, we want to give it breathing room. Because they are so volatile, we often have a lot of moves that come down very quickly, doing stop hunts, taking out stop losses which would be lying around here, before then shooting off to where our take profit would be. Low R, high win rate is the way that I trade. I could be more risky and have it like here, as I said, for a 1 to 9. However, if I'd done this all the time when I traded, more often than not, I would be getting stopped out and then price would rush to my take profit. Slow and steady wins the race. You are not trying to get instant results, pass funders within one trade. That is not the way that trading is going to work in the long term. If you are chasing these short-term quick gains, you will have the money taken back by the market at some point or another. However, when you play it safe, you have a built system in place and you are consistent with it, you get more consistent returns and are able to build a more reliable system for you to trade with. So anyways, I hope this video helped and I hope you guys understood all of the confluences that we went through: break of structure, retracement to a point of interest, an inversion, and a change of character. All very simple within the markets. You guys could simply learn this and learn the confluences by using the bootcamp in the Discord. Now, if you guys aren't already in there, just simply drop me a DM on my Instagram and we will get to work. Hope you guys enjoyed the video and let me know if you want more educational content like this.